Happy Monday, everybody. I hope you had a great weekend. Last week was a bit all over the place, so let's jump in and we'll review, and then, of course, we'll preview what will be a big week this week. This past weekend's news, or should I say Friday's news, of the jobs data came out while the markets were closed, so we'll see that reaction today. Last week, Monday kicked off with news from overnight that the OPEC Plus had met, and as I've been mentioning, they don't like the $60 to $70 oil. They're going to act to keep it at $80 plus. So what are they doing? In addition to the previously announced production cuts, they've added another 1.5 million barrels per day to the cuts. Now, over 3.5 million barrels a day are coming off the market. As I mentioned on last week's call, since it happened the morning of the call, this is inflationary. Think transportation, manufacturing, even just filling up your tank. Summer driving season is coming, but I think the biggest concern is that OPEC Plus may be thinking that the Chinese and global reopening will not be as strong as previously thought. That would be problematic. We had some tape bombs from both the ECB and the EIA noting that this could be inflationary. Remember, we'll look at core CPI, so food and energy will be out. Overall, that took oil higher and stocks followed suit in quiet trading. Fed head Bullard added some hawkish comments. ISM was pretty close to perfect, and Atlanta GDP estimates were dropped pretty far to 1.7%. Versus the previous 2.5%. As we know, soft data, bad news is good news. Bizarro world, but that's where we are. For the day, the Dow was up about 1%, S&P about 1.3%, and the NASDAQ was down about 0.25%. Tuesday saw an about face again, all back to the other side of the boat, as I say, and the markets came back, gave back all of Monday's gains and then some. Markets opened higher as the market digested some news from the Reserve Bank of Australia's decision to pause rate hikes and wait and see. Are you seeing some pattern here? We're paying a lot of attention to other central banks around the world. Do you think Jay Powell has these guys on speed dial, even if Sydney is 14 hours ahead of New York? There were also inflation reports from South Korea and the Eurozone that came in cooler. The JOLTS report, that came in light, under 10 million for the first time since May of 2021. It was initially viewed as positive, but then stocks rolled over as recession fears came back. Odd that, again, the Fed wants to see more normalized labor market, but recall that the JOLTS was more in the 7 to 7.5 million pre-pandemic, so this is still high, but the fear resurfaced about the growth falling off a cliff. Dow, S&P, and NASDAQ all gave it back about 1/2% on the day. May have just been some more profit taking before the long weekend. Markets opened a bit lower on Wednesday as Fed head Mester was on the tape with some hawkish comments, again pushing back on the idea of rate cuts later this year. ADP reported disappointed, and again, there was a fear of hard landing was back on the street. The markets were still positioning, and some profit taking continued in the markets. The Dow was up about 0.25%, S&P was down about 0.25%, and the NASDAQ was down about 1%. Looking towards the long weekend and markets closed for Good Friday, markets opened lower on Thursday. Jobless claims are a bit higher than expected. Labor market's getting tighter, back over 228,000, but down from last week. As I've been mentioning, non-farm payrolls are due out Friday and the markets are closed, so everyone will have the whole weekend to evaluate them. The NYSE put in the second lowest volume day this year on Thursday. So that says more than just Passover to me. It is wait and see. It's the wait and see crew. So Fed head Bullard keeps hitting the tape, this time again with his comments about sticky inflation and how hard 2% will be to accomplish. Nothing new from him, but no one wants to hear this. Tech stocks led the turn, and by the end of the day, the markets were in the green. Dow was up ever so slightly for the day after being down over 150 earlier. S&P was up about 1/3% after being down 1/2% early in the day, and the NASDAQ was up 0.75% for the day. For the week, the Dow was up a bit over 0.5%. The S&P was down 0.1% for the week, and the NASDAQ lost 1.1% for the short week. This was a pretty tame week as weeks go. Friday, when everyone was away from the markets, the non-farm payrolls hit and showed a pretty resilient economy. Good news is good news or not. Inflation, the important word, moderating by some accounts. Payrolls were up by 236,000, almost in line with the 238,000 expected. Unemployment rate fell to 3.5%, down a bit from the 3.6% last month. We did see wage increases stay in the 4.2% range, and though that's too high for the Fed, it is moderating and it's not so outrageous. As I mentioned before, my opinion is that if we can get a strong labor market with moderating wage growth, that to me says we have people working, getting paid enough to spend, and so many of the other price points are coming down, even rent. This seems to me, in my opinion, that we're approaching the soft landing. Market's still banking on the quarter point increase at the May meeting, but a lot of wood to chop between now and then. Many days of possible surprises. We'll see. As of now, as I record this, it seems that we'll be opening a bit lower. Let's see what today brings. For now, All of the trades that did not happen on Friday with the data need to clear today. So we'll see how that goes. Overall, before we hit the preview, I think there are a few things that can break us out of this trading range. Note that is the 3,800 to 4,200 on the S&P. Three ideas that I'd like to share. First, the jobs report from past Friday, as I told you about. We'll see what reaction we get today. Not much over the weekend in the futures. Second, and not to spoil the surprise, but the upcoming CPI this week. We'll talk more about that in a moment. Finally, the last possibility to mention today is a bit further off, but that's when we start looking at 2024 earnings per share estimates for the S&P. We'll get to that in the summer, but it may make a difference the more we find out when we get earnings in the coming weeks. Okay, what to watch for this week. Monday and Tuesday will all be about the Fed heads. Williams, Goolsbee, Harker, Kashkari, they'll all get their say. Then the news starts coming fast and furious. Wednesday will be CPI and FOMC minutes from the last meeting. Thursday will bring PPI, and Friday will bring retail sales and University of Michigan inflation expectations and consumer sentiment. Heavy news later in the week, so strap in. A lot's going on all over. We did have China doing military exercises near Taiwan. That cannot be soothing. Add in the political news from all around, from state court decisions about abortion bills to Tennessee lawmakers removed from the floor of the House. Ukraine and Russia are still in this. Ukraine's working the phones for more aid. Oh, and we'll get focus back on banks because big bank earnings will start Friday of this week, and there's still calls that the SVB deal, the banking crisis, is not over yet. We'll have to see. There's a lot going on here. As I mentioned before, there will need to be something to bump us out of this trading range. We're not sure what that is, and we're not sure which direction, but stay tuned. For now, please check in on Friday for a planning video, and we'll be back next week to explain after the fact all that goes on this week. Stay in touch and have a great week.